Understanding how to properly underwrite an asset that you're looking to purchase, that's crucial. So you need to, educate yourself on that if you're not familiar with it. And then also finding someone that has experience that you can partner with.
Hi guys, this is Julian Castle, and I'm here with a very special guest. His name is Michael. Michael is from Granite Towers Asset Management, and he's going to be showing us with us his journey. And so, Michael, big welcome. How are you today?
Thank you so much, Julian. I'm doing great, and I appreciate you having me on today.
Amazing, love it. So Michael, I always like to start with this question. You suddenly lose everything today. What would you do?
Yeah, that is a great question. And I think that's probably a question that everybody should consider, whether they're just starting, in real estate or a different type of business, or if they're, way down the path and they've built a large business, because it's going to open up your eyes. But back to your question, if I suddenly lost everything, and I think it depends on what you're talking about. Are you losing everything in your business? Are you losing your family? Are you losing, all your financial worth? But I'm going to consider the answer to this question based on our multifamily business. So if we lost all of our properties, lost our business, went bankrupt, what would I do? And I think the first thing that I would do is, I'd take a step back and analyze what went wrong and how can I learn from that unfortunate event. Life is all about learning from mistakes, and you're going to make mistakes. You're going to have failures as you go through your business or your life, but you need to take a step back and say, hey, what went wrong here? How can I prevent it from happening again? And then what I would do is build up the knowledge, build up the team, build up the mindset wherever that gap was. Try to build that so that way it doesn't happen again. And going into multifamily investing, it's probably one of four pillars that went wrong to make us lose everything. There's location. Did you buy in the right location? There's the team. Did you have the right team? The debt. Did you put the wrong debt in place? Or the asset management? And so for our multifamily business, I would take a step back and figure out which one of those pillars really created the downfall of our company, and really dive in deep there and figure out what we can do to alleviate that from happening again.
That's amazing. Gotcha. So, what would be the next step for you to start building this back up?
Yep. So I think the first thing is education. So, let's say our team, fell apart, and that's what created the bankruptcy or created us to lose everything. Educate yourselves on team. So, are there some seminars that you can go to? Is there an expert in the field that you can hire as a mentor? Or maybe someone that has a fantastic team, that's proven it over decades of experience. Maybe you can, provide value to them, work for them for free, and gain that expertise. So that way you can create a better team in your own organization when you start another business. So I think that's number one, is start with education. If I didn't have any funds, obviously you're probably going to need to get a job. And if I had to start over, I would get a job in the industry that I was wanting to build a business in. So I love multifamily. I love commercial real estate. So if I lost everything, I'd probably stick in the same industry, but I would try to get a job within the industry so that way I could build out my expertise even further. So personally, I'd probably get a property management job or an asset management job within the industry. So I think that's super important as well.
That's great. And so once you have this education and once you start already to make a living, what would be the next step to, build this thing again?
Yep. So in the multifamily space, I think there's a couple of different avenues that you have to take. First off, if you're going to be raising money from limited partners, you need to build those connections. So I would right away start networking with other individuals, whether that be at real estate seminars, friends, family, colleagues, you name it, and just tell them what I'm looking to do and why I love the investment opportunity that's going to be coming up in the next couple of years when I jump back in. So that would be very important. Building broker relationships. Even if I lost everything, I would probably still have those relationships with the brokers that we bought from previously. But that's extremely important. You need to paint a picture for those brokers and have them, understand and believe in you that you're going to be able to do exactly what you say you're going to do. So I would do that as well. I would also educate myself on the market that I'm looking to invest in. And that goes back to those pillars. Was it the wrong location that we bought in? Did we buy in a market that was not diversified for the jobs? Or maybe it was too small of a market. Maybe it was a tertiary market where there's 50,000 people and it just wasn't a big enough market to support the multifamily project that I had. So I would do a lot of research on the market, fly into that market, spend a couple of weeks there, drive all the streets, meet with the property management teams, meet with the brokers, get to know the area, talk to the local residents, understand what the growth looks like, what the business growth looks like, and just fully understand the actual location that you're looking to jump back into. So those are a couple other things that I would do, right at the beginning.
Gotcha. And once you have a little bit of understanding of the education that you need, plus you've gone back to the area where you're looking to invest in, talking to the brokers and the property managers, what would be the next step for you to begin this journey?
I think understanding how to properly underwrite an asset that you're looking to purchase, that's crucial. So you need to, educate yourself on that if you're not familiar with it. And then also finding someone that has experience that you can partner with. I think back to when we started in our multifamily career, which was about 7 years ago. We bought a 20 unit, we bought an 8 unit, and we bought a 45 unit. And my business partner had bought a few apartment complexes, but we were really, cutting our teeth on our own. We were learning as we went. We were making mistakes. We were having, a lot of success as well. But if we would have partnered up with someone that had already done 10, 20, 30 deals, we would have been able to alleviate a lot of mistakes early on. So that's something else that I would do. I would search out that partner, and whether that meant, jumping into a multifamily deal and not getting paid, but still doing a lot of the work. I think the amount of expertise and knowledge that you're going to gain through that partnership is going to be worth its weight in gold. By really gaining the experience from that experienced multifamily operator. So that would be another important piece of the puzzle early on.
Gotcha. That's a huge one, I would say. So underwriting, you're learning how to underwrite. Where can someone find this education for underwriting?
Yeah, that's a great question. So first off, being a part of real estate groups, you have a fantastic group, Julian, 150,000 plus people, all interested in real estate and business. And so being a part of those groups or bigger pockets, there's countless different groups out there that you can become a part of. And don't just become a part of them, communicate on those platforms, educate yourselves, read what other people are posting and communicate with them. So that's going to be hugely beneficial. Go to seminars that are about the niche that you're looking to get into. So if you're looking to get into multifamily, go to a multifamily real estate investing seminar. If you're looking to get into triple net, go to triple net. If you're looking to get into flipping, go to a flipping seminar. Just make sure it's focused in on what you're looking to do. There's a lot of real estate seminars out there where they just give you a little bit of everything. So they might give you a little bit on crypto, a little bit on multifamily, a little bit on retail, a little bit on office. And you're probably not going to get enough information and dive deep enough where you're going to actually learn how to analyze a deal. So for instance, if you're looking to get into multifamily, jump into a few seminars throughout the year, whether you have to fly to that market or if it's in your local market, and just dive in deep. Also, you can hire a mentor. We hired a mentor about 6.5 years ago, and we've been with them ever since. And it's provided a ton of value for us. Sure, we knew how to underwrite a deal, 7 years ago when we started, but we didn't know how to underwrite it like we do today. So they can teach you a lot about how to properly underwrite. And, of course, like I said before, if you partner up with someone that's done it, 10, 20, 30 times, transactions that they've closed on, they've probably underwritten thousands of deals, and they can teach you a lot as well.
That's amazing. So how does one find someone that has a good track record, and how does one approach this person and offer to work for free in order to get the experience?
Yep. So I think finding someone with a track record, you're going to have to go out there and you're going to have to network. Obviously, you can talk to other investors that you know and ask them, hey, who do you know in the industry that has done a lot of deals, that has great experience, that has a great track record, and then reach out to them or have them connect you with them. But if you don't have that, start going to these real estate events and start talking to people. Ask them what their experience is. Ask if they were the lead general partners on the deals. Ask how their deals did. Ask how many deals they've done. And you're going to get to know the people that have a significant amount of experience very quickly. Now, once you find those people, a couple of things that you should do, before you ask to work for them, vet them. So you want to make sure, first off, that you have a good gut feel when you're talking to them. So does their personality match your personality, or are they going to be easy to get along with? If you run into issues on a multifamily property or whatever you're looking to invest in, are they going to work through it with a level head, or are they going to blow up? And I would say that's one of the most important pieces. And then call, some of their investors or some people that have worked with them before and further vet them out and just make sure that they're the real deal and that, you feel comfortable approaching them, to possibly partner up. Now, when you ask them to partner with them, I would more so take a step back and communicate with them what you're looking to do and what value you can bring. So if you're new to the game, maybe you say, hey, I have a lot of time on my hands. I'm local in the market that you're investing in. Maybe you're living in Dallas and they're living in, New York, and they're investing in properties in Dallas. You say, hey, I would love to be boots on the ground for you. I'm willing to cut my teeth, go do site visits for you, do secret shops, do comp surveys, check on your CapEx projects, whatever you need me to do. I'm not looking to get paid. I would just love to gain the experience. Can you keep an open mind when you take on your next project and consider, bringing me on? And then follow up with that person. Just because you talk to them once doesn't mean they're going to remember you. So follow up every, 3 or 4 weeks and say, hey, just checking in. If you have any additional projects, I'd still love to have the opportunity to work with you all. Here's what we talked about. And if you stay in front of that person, you might have an opportunity that pops up. And if you do that with a handful of people, you're likely to get your foot in the door sooner than later.
That's amazing. Yeah. So now that you have a little bit of underwriting, you have education, plus you potentially have someone that could help you in terms of he's a person with more experience, so you can ride along on his deal and gain experience. What's the next step in order for you to continue?
Yeah, I think if you haven't visited the market or honed in on the market that you're going to invest in, figure out the market that you're going to invest in and go hard in that market. So one of the mistakes that we made, 7 years ago when we started in the multifamily business is we chose the wrong market.
Yeah.
I lived in Minnesota. My business partner, Dan Breezy, he grew up in Minnesota. We knew each other for decades. And we decided, hey, we're just going to invest in Minnesota because that's what we know. It's a solid market, good amount of growth, pretty business friendly. And we had troubles finding our first multifamily project. It took almost a year because there wasn't enough deal flow. Fast forward, we finally integrated down in Dallas, Fort Worth, and we started getting deal after deal after deal. And if we would have, taken a step back and, really honed in on the market dynamics, where's the population growth, where's the business growth, what market and city is most landlord friendly, and not only that, but where is the biggest pipeline of deals, that are coming through, we would have understood that, we probably should have ventured out and chosen another market other than just Minnesota. So again, I think choosing the location that you're going to invest in is absolutely crucial at that step.
Gotcha. So can you give us how do you choose the correct market?
Yeah, for each person, it's going to be a little different. So for us, we're going to look at population growth. We want to make sure that it's above industry norm, so that it's beating out a lot of other states. We're going to look at business growth because obviously what business growth means is that you have people moving there, which means you have more tenants, to rent your apartment. We're going to look at the amount of supply coming down the pipeline. So is the market oversupplied, or is there a significant amount of supply coming online? That might impact our decision as well. Is the market landlord friendly or is it tenant friendly? You look at New York and California. Yeah, sure. People can do great, investing in real estate in those markets. but they don't have as much wind at their sails. Whereas, for us, we focus on Dallas, Fort Worth, and Nashville because they are very landlord friendly. We can get tenants out quickly if they're not paying their rent. We don't have rent control. And so that helps us be more successful quicker. We also look at the population of the market as well. We want to be in major MSAs, so major primary markets. And the reason for that is if you're in a tertiary or secondary market, a lot of times it's tougher to find crucial team members. So property management companies, landscapers, contractors, pest control, trash removal. There's not as many great options to choose from. So if you go into a small tertiary market where maybe you have 75,000 people and you find a great property management team, and 6 months down the line or a year down the line, that management team falls apart, it might be tough to find another backup management team that you feel great about to step in. Whereas if you're in a Dallas or a Charlotte or a Nashville, you're likely going to have multiple great options to choose from.
That's great. So focus on the right area with these different criterias, which is to be population growth, job growth, friendly to the landlords, and also it's in a primary market.
Yep. And then I would also, once you figure out the area, then you need to dive into the submarkets and, take a look at what submarkets you're interested in. And then once you find a property to analyze, you need to take a look at things like the median household income in that neighborhood, the crime rates, how high is the crime? All of those little items make a big difference, in the amount of success that you're going to see. So make sure to do your due diligence.
Gotcha. Okay, great. And once you have this market selected, what is the next step?
Yep. So again, build out the relationship with the brokers so you get the deal flow.
Mhm.
And then once you have the deal flow coming in, you're going to want to track, which properties you're underwriting, what submarkets, what brokers they're coming from, track how close you are to pricing, and start submitting letters of intent. So if you feel comfortable with the partner that you've chosen to partner up with, you feel comfortable on, raising the capital that you're going to need, then you're going to start submitting offers. And one other thing that you're probably going to want to do is set a guideline on what type of property and how big of property or small of property you're willing to go to. So let's say you can raise $1 million and that buys a 30 unit property up to 30 units or 40 units. Then you're probably not going to be underwriting a lot of 200 or 300 unit deals. So get clear on your criteria on what type of properties you're going to be underwriting. And then once you're submitting LOIs, letters of intent, so essentially a written offer that's not legally binding, but you're offering on these properties, then you're going to want to be following up with these brokers, letting them know why you submitted an offer or why you didn't. And if you weren't at the price that they wanted you to get at, just let them know why. Maybe you couldn't get to the rent growth that they expected, or maybe there was a lot of rehab that needed to be done on the property. So just be open and communicative with the brokers as well.
Got it. And how do you approach a broker for him to take you seriously?
Yep. So I think, first off, it depends on your experience. So if you have someone that you're partnering up with that has a significant amount of experience, you can ride their coattails. You can say, hey, our group, that's going to be looking to take down a property with you guys over the next 6 to 12 months. We've done 15 transactions in these markets. Here's our resume. And they're going to be able to feel comfortable with you. If you haven't done that, or you don't have that partner, paint a picture of what you've done in the past. Maybe you've done some single family flips or single family rental properties. Give them anything you can and just build that personal relationship. Maybe take them out to dinner. And then just communicate with them. So if you don't have the experience, every single property that you look at and that you offer on, even if you don't get it, they're going to see that you really want to be active in this community and that you really want to buy a deal from them. And eventually, if you lose out on 5, 10, 15 deals with that single broker, they're going to start to feel for you, and they might toss you a bone and eventually give you a property to work with.
Gotcha. Okay, that's great. And what is you mentioned start doing the LOIs, how many deals should you be do you look at? And how much percentage would you be giving LOIs to?
Yep. So that's a great question. For us, we probably underwrite, I would say, 200 to 300 deals per year, so right
Mhm.
around one a day or so that we actually underwrite. Now, there is a significant amount more deals that come to our inbox, but they don't hit our criteria. So maybe the property's too small, or it's too big, or it's not in the right area. So we don't underwrite those properties. Now, when you first get started, you're probably not going to have that type of deal flow. So you're going to underwrite whatever comes across your desk, especially to get that experience. But I would say if you could get up to, possibly one a day or at least a few a week, that would definitely be ideal. Now, percentage of LOIs that we submit, when we first got into the market, we started out submitting a lot more LOIs than what we do now.
Mhm.
And the reason for that is, brokers didn't know us. We didn't know the area and our criteria quite as well. So we were submitting on a lot more deals. Whereas now we're able to take a look at the deals that we underwrite and say, yeah, this is a great deal for our portfolio and for our investors. Let's go ahead and submit an LOI. And we feel confident that we have a good chance. Whereas before we would submit an LOI on anything that generally hit our criteria that we thought we had a decent chance at getting.
Got it. Okay, so let's touch a little bit on the criteria. You mentioned that it
Mhm.
depends, you know, to every person. What is something that would allow someone who to get a criteria down that would be more niche down, than just an overall good deal?
Yep. So I would say, first off, you want to hone in on the size of the property. So are you going to limit yourself to 50 units or 100 or 150? For us, it's anywhere in between 90 and 300 units is what we really specialize in. And then you want to hone in on what type of asset class. So are you looking for, multifamily, or are you looking for mixed use, or are you open to both, or are you, looking for office? Hone in on that. Also, year built. So are you going to stick to a certain vintage of property? Maybe you're focused on 1980s and 1990 built. You don't want to go, previous to 1970 because it's just a little too old for you. Or maybe you don't want to go A class because they might have a little bit more risk when you have an economic downturn. So hone in on that as well. Couple other things that we pay close attention to is household median household income on the 1 mile. So 1 mile radius around the property, what's the median household income? And if it's not at least $50,000, we pass. And the
Hmm.
reason for that is if you get into the lower demographic tenant base, a lot of times they might struggle with delinquency, so not be able to pay their rent because the cost of living is so high and it's just tough to afford those rents. So we pay close attention to that. We also pay close attention to the neighborhood income. So when you're taking a look at the 1 mile median household income, well, the neighborhood that the property is in might be a lot different than that 1 mile median household income. So we typically want that, at least around 50,000 or higher as well. Crime rates, very, very important. So when you're taking a look at a market, just try to understand what the crime rates are like in the different submarkets. And if the crime rate is higher than a lot of the other submarkets, that's a red flag, and you might want to, stray away from that deal. So those are a few pieces of information. Another piece of criteria is the occupancy. What's the occupancy been like over the last 90 days? Is it going to qualify for agency financing or the financing that you're looking to get? If you take on a property that has 60% occupancy, that's going to be a heavy lift. Are you up for that challenge? And some people do great with that, but it takes a lot of time and effort and, expertise to really bring the occupancy up on a distressed asset. So pay close attention to that. Also pay close attention to the financials that you're looking at. What does the delinquency look like? What are the concessions look like? If they're extremely high, is there a red flag out there that maybe you should pass on that project and move on to the next?
Got it. So one thing that I'd like to get a little bit clear on is you mentioned what the limit of the units are. Why would
Mhm.
someone like why would someone want to start, for 16 at 32? Or why would someone want to start from 50 to 100? Or for example, you now only do 90 to 300. Like what is the question they could ask themselves to find out the answer to the unit sizes that they should go after?
Yep. So I think first off, what do you feel comfortable with bringing to the table for capital? And right now is a very interesting time to raise capital if that's what you're looking to do,
Mm.
because there's a lot of fear in the market. Obviously, pricing has went down, which has created fear. Anytime you have an economic downturn, whether you're looking at stocks, bonds, multifamily, retail office, there's going to be fear in the market. So there's not going to be as many dollars invested into the space. I was just reading an article the other day, and investment into commercial real estate is down about 57% from a year ago. So it's dropped off significantly.
Mm.
So again, ask yourself, how much do I feel comfortable with, bringing to the table from my own equity, so funds that I have in the bank, and then equity that I can, bring from limited partners. And that's going to set a criteria of how large a property you can buy. Now, on the other side of the spectrum, smaller properties, do you feel comfortable taking on a property that's less than 90 units? A lot of times when you're less than 90 units, you don't have on-site staff. So you don't have an on-site manager and a leasing agent and a maintenance tech that you can afford to fully staff at the property. And that gets to be a little bit trickier to manage those deals when you don't have on-site staff full time. So that's the reason why we limit ourselves, our minimum is 90 units, because anything less than that, typically you have to have a scattered management concept where, you have a floating maintenance tech from the management company that is bouncing around in between multiple properties and leasing agent. And in our opinion, there's less management companies that are really, really good at that. Sure, you can find it. We actually have one property that we have that implemented on, but it gets a little bit tougher. Plus economies of scale. The bigger the property you get or that you're able to purchase, the more economies of scale that you have. The more you can spread out the risk amongst many units instead of a few units.
Got it. And so for the person that is asking themselves this question, how much money are they bringing to the table? Can someone start in multifamily if they don't have any money?
Yeah, I think they can, but you need to find the right partner to partner up with, in my opinion. So if you don't have any money, what value are you bringing to the table? Are you boots on the ground? Are you going to do the asset management? Are you going to oversee CapEx? But you likely need someone that has money, especially if you're going to syndicate a deal, raise capital from other people. You're likely going to need, a decent chunk of change to put down, to put the property under contract. You're going to have to take care of legal fees. You're going to have to take care of title and loan application fees. Now, on the flip side, if you're doing a small multifamily property, maybe a 5-unit property, maybe you can find seller financing. Maybe you can get into a project where the property is distressed, or the person that owns it wants out, and get into that property without having a partner and without having funds. Personally, I look back on our multifamily experience and track record, and I wish I would have skipped the small stuff. The 8-unit that we bought, the 12-unit that we bought, the 20-unit that we bought. I wish we would have skipped that and went straight to the larger properties to get the economies of scale, and then also, partnered up with some experienced individuals.
Got it. So you would have started with the 90 to 300 units.
Correct. That's exactly right.
Okay, great. And is it possible to do creative financing on a unit on a deal size this big?
I'm sure there's probably an opportunity out there. I have never came across one, and we've been doing this for about 7 years. A lot of times when you're buying a 90 to 300 plus unit apartment community, these sellers are pretty sophisticated. And so typically they're going to sell it on the open market, or, they're going to choose a buyer that has experience that can jump in and say exactly what they say they're going to do.
Yeah. Okay, great. And so now that we touched on, what the deal size is and how many units they should underwrite, you say you do 200 to 300 a year. What are some next steps that the person can, what's the next step like now?
Yeah, I would say, when you're looking at deals, when you're analyzing, when you're offering, I would continue to network with individuals. Building out your database is always key. Make sure to track, who you're meeting, when you met them, what you talked about, their contact information. You're also going to want to be driving the properties that you submit offers on. One of the worst things that you can do is submit an offer on a property, and then you get called into best and final, which is kind of like the final round of bidding. And if you haven't visited the property, well, you kind of have to visit a property before you purchase it. So then you go out to the property, you tour it during best and final, and you find out there's a lot more CapEx than you thought there was, or it's more distressed than you thought. And you say, hey, brokers, I actually have to decrease my price or I have to fully pull out. Selling brokers do not like that. So I would highly recommend anytime that you can tour the property before you submit an offer, that's going to be very, very beneficial to you. So those would be a couple more pieces, and, just further hone, your education, your knowledge base, try to build as many systems as you can before you take on your first property. So that way, when you step in, you're not overwhelmed by, creating a webinar for your investors, creating, all the organization that goes into filing all the documents for the property, creating a task management system, figuring out your email. You probably want to have some of those in place beforehand.
Got you. So the systems, how can you go ahead and get a system education?
Yeah, that's a great question. I'm not 100% sure on that answer. We've, learned over time. I would say the best possible, way to go about that is just learning from others. So ask others what type of systems they're using in their multifamily or commercial real estate business, and try to copy what they're doing. Again, one of the best avenues that I've seen taken by a lot of syndicators is they ask to, be a part of someone else's team. They're going to provide value. They're not going to get paid, or maybe they're going to get paid a small amount. And they're able to see exactly what systems they use, how they communicate with their investors, how they put the deal together, how they structured it. And so you can learn a lot by partnering up with someone, even if you're not, gaining financially.
That's great. Gotcha. Okay, so that's amazing. And so a little bit of, I guess this is where the end, of the what happens next is, right? Now you have the systems in place, you have the underwriting in place, you have a mentor in place, or a partner that you're working with, and now it's just about doing the work, right?
Yep, that's exactly right. Do the work, find your first property, put that baby under contract, raise the capital, close on the deal, obviously put the financing in place. I mean, there's 100 different tasks that come in between putting a property under contract and closing. But once you close on that asset, it's going to be up to you to properly asset manage the deal. And, getting a deal over the finish line is the easy part. Asset managing it and creating, better financial performance and driving the value of the property up, that's the tough part. I mean, it's going to be day in and day out. You're going to be communicating with all your team members. And so just be ready for that and make sure that you have sufficient time to stick into that asset to make it a success.
Yeah. And I think we touched on capital raising, but maybe not in depth. What can someone start to do in order to, how do you approach someone who's going to be an investor in your deal?
Yep. So I would say communicate with them what you're looking to do. So maybe, if you just have a general conversation with someone, you ask them what they do for a living, they're likely going to ask you. And even if you have a full-time corporate job, tell them about both. Tell them about your corporate job, but also tell them about the business that you're starting and why you're looking to get into this type of commercial real estate, and, why you love the avenue as well. And that conversation will develop. They'll start to get to a feel for you and what you're looking to do. And then if you can consistently follow up with that person, so maybe you put together newsletters, or maybe you just email them once a month, everyone in your database, and say, hey, this is what we've been up to. We've underwritten 20 deals. We've spent some significant time in this market. We've vetted out our property management team and so on. The more that you can be in communication with that individual or those individuals that you met, the more they're going to correlate you with a real estate investor rather than just some random person that they met.
Got it. Okay, that's great advice. So, Michael, in these past 7 years, how many units have you been able to acquire?
Yeah, great question. So I actually started out in the single family rental business. I house hacked my first house back in 2009. I was going to college. My girlfriend and I bought that house. We rented out 3 out of the 4 bedrooms and fell in love with cash flow. So we decided to buy a couple of other single family rentals. Our original goal was to get up to 100 single family rental properties over an indefinite amount of time. We didn't know when we wanted to do that.
Yeah.
Fast forward a few years, we only had 3. And my good friend, now business partner, had been buying apartments. He had bought a duplex, he had bought a 9-unit, he bought a 24-unit, and they were all cash flowing very nicely. And he had third-party property management in place to take care of all the day-to-day operations. I was handling everything. I was driving down to Minneapolis for my corporate job, spending 2 hours commuting every day. And then I would drive up to St. Cloud, which was another hour from my home, to do all the showings, to do the evictions, to do all the maintenance. Because if I didn't do that, I wasn't cash flowing on the assets. And I remember driving to work thinking, gosh, there has got to be a better way than this to build wealth and to build passive income and become financially free. And that's where I started studying. I started talking to my business partner, and I found out that apartments, really were the avenue that I wanted to take. So eventually sold off those single family properties. We bought an 8-unit, we bought a 20-unit, we bought a 45-unit. So we slowly scaled up. And then we started buying 90+ unit apartment complexes. And over the last 7 years, we've been able to grow our portfolio. Right now, we have about 2,500 units under management. And then we've sold about 9 deals as well. And again, we started in the Midwest, but we shifted to Dallas, Fort Worth, and Nashville. Those are our 2 markets that we're honed in on. And, we really pride ourselves in our asset management capabilities and then also our communication. And, for anybody that's looking to jump in the multifamily space, communication is everything. Whether something is going phenomenally well, whether something's going okay, or whether you're having issues, if you have investors that have invested with you or that are investing with you, you need to make sure that your communication is on par and that you over communicate instead of under communicate. People really appreciate that. So keep that in mind.
That's amazing. Where'd you learn to over communicate? Is there a process you follow?
So we do monthly updates on all of our properties, and what we'll typically provide in those monthly updates are, a little bit about how the project did over the last month financially, what CapEx projects we implemented, how all the CapEx projects are going. We'll provide photos. Every time we do a site visit, we'll do a site visit video. So we put together a 2 to 5 minute video showing them around the property, showing them the CapEx projects, talking a little bit about the financial performance. So that way, those investors can feel like they're at the property with you. So that's crucial as well. Providing the actual financials. I mean, there's some syndicators out there that don't give the financials to their limited partners, or they withhold them until they ask. We provide it every month because we want our investors to take a look at those financials if they feel the need to do so. And then also, be on top of timely tax returns. Very, very important to get those done by the deadline if at all possible. And, as you grow your business, try to implement some sort of CRM platform. So that way your investors can log in, can see their deals that they're invested in, can access their documents. Anything that you can do to make their lives easier is going to be very beneficial for everyone involved.
That's amazing. And when it comes to asset management, did someone teach you? Did you learn by doing?
So we learn by doing. Our first few projects, we did not partner up with anyone. So again, we cut our teeth. We came up with the systems, came up with the organization, figured out how to properly asset manage. So the last, 14 years have been us learning how to asset manage properly. I wish there would have been, a course or something or someone that could have, taught us along the way. So that is something that I would have changed if I could take back time.
Yeah. Is there currently something like that available?
So as far as asset management, I'm not sure if there's an actual program out there right now. We haven't came across a specific asset management program for multifamily. There's a lot of groups out there that teach multifamily apartment investing, how to land your first deal, how to close on the asset, but not a lot is taught about asset management, which is the most crucial piece. Now, we're actually working on a program right now. It's an asset management course for multifamily. It can also be applied to other, commercial real estate industries as well. But we should be finished up with that. I would say in the next couple of months, it'll likely be, 8 to 12 modules, probably about an hour each, and then a lot of actual physical assets that you can use. So different systems, different spreadsheets that you can implement into your company that you're growing.
That's amazing. And
Yeah.
And so these would be the actual systems that you have in place, plus kind of like your understanding of it, right?
Correct, exactly. So it's 8 pillars. It goes through, everything that you need to know how to properly asset manage a deal. And then it also gives you the tools so that way you don't have to, put together every single spreadsheet that you need. I mean, there's, investor trackers, weekly call, spreadsheets, CapEx spreadsheets. I mean, there's so many different, tools that you need to utilize when you're asset managing a multifamily or commercial real estate property.
Got it. That's amazing. And so, Michael, where do people learn about you more? If they really like what they heard today, if they wanted to invest in one of your deals or, you know, just hear from you, to see what you're up to, like where can they find you?
Yeah. So if you go to Granite Towers Equity Group.com, again, that's Granite Towers Equity Group.com. You can fill out the contact us page and that'll get you into our database. We'll schedule a call with you and have a little bit deeper discussion. We also have a free ebook on that website as well on passive investing.
Mhm.
Some critical information on how to vet a sponsorship team, how to vet the market, how to analyze the deal, and then how to figure out what their actual inside team looks like as well. And those are all crucial steps to, creating a successful passive investment. So make sure to check that out as well.
That's amazing. And I kind of want to switch gears a little bit. We have a few minutes, and we've already discussed what you suddenly would do if you lost it all today. Now, looking forward, 3 years out plus, what are you looking to accomplish?
Yep. So 3 years out, we want to continue to build our multifamily portfolio. About 5 years from now, we'd like to be at about 10,000 units.
Hmm.
We may look to vertically integrate. We're exploring that option of creating our own management team.
Hmm.
And then the other option that we're diving into right now is triple net lease property investing. And
Hmm.
so we're looking to purchase 1 to 2 triple net lease projects this year, and then we'll be scaling that out over the future years. And one of the reasons that we love triple net lease properties, if you have the right tenant, in place, is it's consistent cash flow every single month. You don't have to worry as much about the expenses because the tenant is taking care of all the expenses, repairs and maintenance, taxes, insurance, you name it. So if you get the proper tenant in there, if it's corporately backed, so they have, a huge corporation or hundreds of, other stores that back that lease, you can be very confident that, you can have a great cash flowing asset. So we're looking to dive into that as well.
That's amazing. Great. So I love this interview, and I think the people will definitely love it as well. So I hope that you come back in the future. Maybe we have an update of how everything's are going, and maybe we can go deep into some of the topics that we discussed. But really appreciate this interview with you, Michael, and I hope you did too.
Thanks so much, Julian. I really appreciate it. And, one other tidbit, if anyone does fill out our contact us page or form, mention passive investment tracker, and we'll send you over our passive investment tracker that we put together. It's a really nice spreadsheet to keep track of all of your passive investments.
That's amazing. Thank you, Michael. So I really appreciate you, and I hope you have a good day.
Take care, Julian. Thanks again.